Well, the S&P overall is doing pretty good today, not fantastic. Tesla, on the other hand, is being destroyed. So we're going to evaluate and see, is this a buying opportunity or maybe something we should skip? Tesla's current revenue is $37 billion. Its number of outstanding shares are almost 3.5 billion, and it has a PE of 37 and a profit margin of 13. These aren't bad numbers, but they're not the best numbers for a company of this type of size. Now we want to predict and see what will the Tesla's outlook be in the future. We're not going to take into account their moonshot projects like Optimus, like their robo-taxi. We're just going to stick to the hard data, to the current numbers. And currently, Tesla is stagnated, but there isn't expected to be a massive adoption of EV. So let's say Tesla can increase its 5 years. I would say it could probably increase its revenue by almost 70%. I'll give it 70%. So if it can do that, its revenue will be $164 billion. Well, next comes the number of outstanding shares. Now, this is very important to understand. Tesla has never done stock repurchase program because they never had cash to do it. I believe in the future, if they have enough capital, they might do this, but I don't think it's going to be that dramatic. So I'm going to say they can probably decrease their number of outstanding shares by 2%, which would make it 3.4 billion instead of the 3.48 billion that it is today. PE is way too high. Its PE is going to have a massive contraction. I believe its PE is going to probably contract to 30 or even less. So to be on the more conservative side, or to give you guys a little bit of a boost, I'm going to say 35, but 67 is not sustainable. So 35 will be its future PE. Profit margin, I think is going to be the same. I don't see this changing, but let's say it somehow figures out everything, it becomes a dominant player, and it can do 18. Let's give it 18. That means in the future, Tesla currently is trading at 1/218. In the future, it will be trading at 304. If you invest in the S&P 500, you'll get a bigger return because your investment in Tesla will be 11% less than if you just invested in the S&P 500. Now let's say the Optimus robot kicks off. I'm going to be 100% honest with you. The people that are going to utilize the Optimus robot aren't going to be normal everyday people. It's going to be baby boomers that need assisted care that can't afford a nurse. So in that situation, I see that revenue maybe 3 to 4xing itself. So that means I'm going to say if that happens, their revenue goes up by 300% if they're first to market and if they can become a dominant player in Optimus robot. Stock going to $706 with everything else staying the same. So basically, you're betting the house on the fact that this Optimus project works. And if it doesn't, it's going to give you a less return than the S&P 500 will in the next 5 years. I don't know if you want to take that kind of gamble because at this point, this, my friend, is a pure speculation. This is pure gambling. I wouldn't invest in this company even if you gave me free money to invest. So you do what you want to do. But I'm not going to bet the house on hoping that their Optimus robot kicks off and I can become a millionaire. I want to invest in companies that have solid fundamentals and a great projection of growth. This is not one of them. You do what you want to do, but according to my calculation, not a company you want to invest in. If you want to see more videos like these, I post about 2 to 3 a week on my Patreon, so consider checking that out. Like and follow for more common sense financial analysis.